Let's go. Yo, how you doing? Let's see what we got going on. Let's see what we got going on. My mic's like, or my webcam's like at the side, but it's fine. I switched the mic. The mic's up here now. You guys can't see it, so it's up there. So I don't have to be like leaning over and all that, doing all that, you know. So that's cool. What's up? How you doing? How you doing? Let's see what these charts are looking like, because I'm late to the charts today. There's our push. This is monthly, obviously. I think I already said that. Trading off the monthly, we obviously are at all-time high price action, as we know. We have this weekly gap forming. 7 hours. You trimmed your beard? Oh, it's the same as last time. It's the same as last time. I trimmed it maybe like a month ago. Tough week. Choppy week. Choppy week. I'm sitting at +1R, which honestly I'm content with, because this week has been tough. Appreciate it, Retro. Let me know if you guys have any issues with the audio or anything. I'm gonna turn the music down a little bit. A little loud. Turn the music down a little bit. Yeah, choppy week. 4 hours been straight range on ES. S&P has been a little bit stronger. You can see NASDAQ is a little bit stronger. SP is a little bit weaker. NASDAQ has been leading, putting in new highs, but we are really just slow grinding up. This is typical all-time high price action, like we talked about last stream, where we kind of just accumulate, then make our next high, then accumulate, then make our next high. But I actually shorted yesterday. I saw so many tweets on Twitter, guys, so many tweets. And I know it's like rage bait, some of them, but some of them are being serious. Don't short all-time highs. You're donut. Like Sir Pickle, I responded to as a joke, because that's my guy. So I'm not throwing shade at Sir Pickle. That's actually my boy. But he posted that. I think his was more of rage bait. But some people were posting that dead serious. Like, why would you ever short all the time? I'm like, dude, if it's a short, it's a short. I'm gonna trade the model. You can't just be like, oh, you can't ever. I get what they're trying to do. They have good intentions with it. They're trying to help beginner traders. Like, a good rule of thumb is to always trade with the trend, trade with the order flow. And when we're printing all-time high price action, a good rule of thumb is not to short. But contextually, when you understand price, when you have screen time, when you really know what you're looking at and the environment you're trading, I think that's a bit too much of a blanket statement, right? I mean, this short was money. I thought the short was the best trade of the day. We're trading within a range, right on the 4 hour. I'm looking at this range external. Let me go to it yesterday. I posted it on Twitter if you guys didn't see it. I gotta start looking at the charts for real though, like for this session. I want to go back and show you this real quick. This short right here is textbook. I don't know why people are acting like you can't short all-time high. You can. You just need context. You need to understand what you're looking at. You need to understand timing. We're not just blindly shorting highs. But this short was money. And then there was continuation down here. This initial short off all-time highs off this inversion. All right, you could take the change in state, you could take the inversion, but either way, this short off all-time high is money. And there was more continuation shorts after that. I'm here to say, yes, a good rule of thumb is to not short all-time highs, but if you have the chart time, if you have the experience, you have, you know what we're looking at, I think it's way too much of a blanket statement to be like, no, never short all-time highs. The best trade of the day, in my opinion, was that short. But yeah, that's my rant. I mean, look at the daily on the S&P. Look at the daily on the S&P. Okay. Key thing I've been working on personally, every single session for me is something I'm working on. I'm always trying to get better. That never stops. That will never ever stop. If you think it stops, you have the wrong idea of what this is. I want to be more adaptable to price. I want to be able to recognize and adapt better. And so this week, I feel like I started to do a better job of saying, hey, this is a range bound week. Right? I've been saying range protocol on my Discord. I've been telling everyone I'm trading the externals of these ranges and playing mean reversion this whole week. Right? I'm not trying to take trend. I think I took one trend trade and it was early in the week. We've been trading within range. So when we're trading within range, we want to focus on mean reversion. When we're trading within range, trend models aren't going to play as well. But let me log in. We're coming off that high. Obviously, there's gaps internal here for value. What up, Niz? We're getting consistent with the streaming, guys. We're gonna start growing the stream every single day, 9:30 a.m. I'm gonna start waking up earlier. I slept in today, I'm not gonna lie. I've been up too late. I was watching the NFL draft last night. Stayed up a little bit too late. We're delivering off this 1 hour internal right now. Bro, you be falling off for months? That's facts. That is true. It's very true. Can't say anything to that, but that it's true. I won't let that happen with the streaming though. I'm gonna be consistent with it every single day. It's something that I can realistically do because I'm already trading and looking at charts all the time. So I might as well kill two birds with one stone, go live and stream. So you won't see a fall off with the streaming. I do find it harder to film long form all the time, like consistently. So from a top-down perspective, again, like I said, the NASDAQ to me is leading. We're putting in new highs. It just is relatively stronger than the S&P. We're trading within a range on the 4 hour. We've been trading within this range the entire week, right? We can go to Monday at 2 a.m. and all we've done is operate within this little range. Obviously, it's a 4 hour range, so there's still opportunity within this. I'd rather have us operate in a 4 hour range than a 15-minute or 5-minute range, but we have been range bound, so that's important context to understand. Coming into today, I want to be able to determine whether I'm operating with external narratives or internal narratives. This is more of range bound price for me, so I'd prefer to play off areas like this again, because the same logic I've had all week. I've been more so fading internal plays and looking for external plays. So I want to play the external of the ranges. So I'd rather play reversals than try to, align with a trend model that I don't feel like has high probability. Like the trend is going to fail in a choppy range bound market. The trend model doesn't have much edge in it. We'll see if we come down. If we come down here and sweep Asia, Asia, London. Asia already got us. Is that Asia? This is Asia. This is Asia, that's London. So if we come down, we sweep London. Could be a little long off the external lows, but we'll see if we just respect this internal and rip higher. But I'm not really interested in much right now. Just kind of waiting. What is this beat? Should we play higher off this internal? We respect this internal. We're looking at the buy side highs up here. Let's draw. Yo, this beat is weird. This beat is weird. So London highs, let's draw if we respect the 1 hour internal. As of right now, we are respecting on the 1 hour. So we really have these lows, we have these highs, and these highs. Because we are respecting internal, we'll be looking at those highs. Assuming we fall through, looking at buy side draw. Let's see here though. Really not doing much. Again, this whole week has been sloppy, choppy price through New York. So I'm not in a rush to do anything. Look at the 5 minute. 5 minute is... The 5 minute is not good. No bueno. There's an inversion on the 5 minute on NASDAQ, but no SMT at the lows. Low probability. This is a small inversion. I don't like the way it's chopping. And then the other thing is I'm just not looking to play off this internal right now. Because, again, I'm just fading. I'm fading the internal plays right now. To me, if I were to long, what is higher probability is we respect this internal. We respect this internal, we put in structure up at the highs, then you play a trend model just to these highs. Something like that would be higher probability to me. But right now, this is just range bound price. I'd rather wait for structure up here to long towards this buy side than try to just long this right here and at the 1 hour gap. Personally. I just don't have conviction in price right now. It doesn't say high probability at all. Whole week has been low probability in my opinion, but you just have to navigate. I'll close my door. Yeah, you just have to navigate. Like, we're plus 1 R on the week, and I'm content with that. Obviously, we've had much better weeks, but this week has been sloppy. Second stage buy model, yeah. I'd rather see us put in structure to be like, okay, we want to come towards these London highs. And if we confirm we want to reach for London highs, then you can maybe play a trend model up to the buy side. Are you trading your mechanical model or just using more of a general system? Well, so I have two models. I grouped them under one system, right? My system is what I call Harmony. Harmony is essentially just a framework around trading the S&P and the NASDAQ. I want to see them move in harmony. But in terms of a mechanical model, there are things that are mechanical about what I'm looking for. Clear, objective things that if they don't happen, I'm not trading. But there's also discretion in my trading. Ultimately, I'm the one pushing the buttons. I'm not a robot. I have intuition. I have things that I lean into with screen time. So it's a blend of both. Yo, these beats are scaring me. Yo, the beats are actually scaring me. But yeah, no, it's a blend of both. It's discretion and there's mechanical aspects to it. You need rules. You need clear rules, because if you don't have rules, you don't know what you're looking for. And if you don't know what you're looking for, you can't be disciplined. You can't wait for it. So you need objective rules around what you're expecting at a price and what gives you edge. And then from there, once you start to get the screen time, like I've been looking at the S&P and the NASDAQ since like 2020. It's ridiculous, right? So at this point, I'd like to think that I can lean on my own intuition. I can lean on my discretion, which I know I can. For some people, that's not the case. Their intuition, that discretion, they haven't built that I call it spidey senses sometimes. I just think that's a fun way of articulating it. But they haven't built that spidey sense around price. So that intuition for them is actually a negative. Their intuition is more of just operating off of emotion. Whereas for me, the intuition it's backed. I've been looking at the charts for so long. So I'll lean into some discretion here and there for sure. There's different nuances to different setups, but there is objective framework to what I'm doing. I need clear draw and liquidity. I need a narrative tag, and then I need my entry model. And then I'm just trading either a continuation model or a reversal model, but they're all under one, I guess, hood or whatever you want to call it, one roof of being harmony system. That's how I view it. Because I'm only looking at the S&P and the NAS. So if I'm only looking at S&P and the NAS, I got to be able to trade range and I got to be able to trade trend. But I would say historically, I've always gravitated more towards trend trading. I trade better in trend. I'm still building my my skill set in range, but there's always room to improve. I think I spent a lot of time getting really good at trading trend, and now I'm starting to get good at trading range. So to answer your question once more, it's a blend of both. I'm of the belief, and again, when I say these things, just understand they're my opinion. You don't have to agree, you don't have to disagree. I'm of the belief that the markets are too complex. The markets are too rigid for me personally. I'll speak for myself, to be able to compete with quant, the quant nerds and the quant traders that are or hedge funds that are just running these crazy algorithms and back tests and have all of that. You know what I mean? Like, I'm not a statistics. I like numbers, I like finance, but I can't compete with dudes from Harvard. Let's be honest. I'm realistic about that. So my best bet to have edge was always to blend my own data with discretion as a discretionary trader. I'm not going to compete with the quants. It's just unrealistic. They not only are they smarter than me, but they have more resources than me. They have more money than me. They have, you know what I mean? It's just unrealistic. So I don't believe in just being fully mechanical. I think the markets are way too complex. They're not black and white. I think there has to be discretion if you're the one pushing the buttons. And there's not much to do for me right now. This is 5-minute chop rule for me. When the 5 minutes trading like this, I'm just sitting out and I'm waiting for a range break. If we want to respect the 1 hour internal and push up and create new structure, could maybe play a trend model to these highs, but I don't love it. Just contextually with where we are. I'd rather like long these lows or even maybe short the highs up here back into the range, but we'll see. You can see in the Discord too, we called range early in the week. Very early in the week. Let me get a screenshot and we'll just talk about it. So I was looking for lower. We started to get our retrace and then we're just consolidating. Bump, bump. Trying to get this picture on the screen. Whoops. This was 10 a.m. yesterday, but we mentioned it earlier in the week as well. But basically, this is where I talked about it the most. Tough week internal, right? So we're trading internal within range. You can see I have these levels up here marked out on the 4-hour. These are the externals of that range. I'm looking for us to sweep these externals and work back into the range. So you can see approaching range highs here. That's our range external right here that I marked out. And then from there, that was the short yesterday that I felt was high probability because we're trading within that range on the 4-hour. So should see longs sell into these highs. That's order pairing, right? Where are longs going to exit? Order pairing logic is very, very important to understand. That we can see we trade into the highs and we revert right back down to range. So there's real logic to what we're doing. It's understanding contextually what you're in, what environment you're in. If we're in a trend market, which you can make the argument we are, I get that, but I'm saying on the 4-hour. On the 4-hour on the daily right now, we're not technically trend, right? You need to understand these nuances. It's like, yes, we just ripped and trended for days and days and days, but right now we're not trending. The last couple days, the last few sessions are not trend. So I'm trading intraday. I'm taking it day by day. Right? So if the weekly's trending, the monthly's trending, that's ideal, that's cool. But the 4-hour looks like this. To me, that's not trend. To me, this is a range environment. So acknowledging that and then adapting to it is the biggest thing. That's the biggest thing I would tell you all to focus on. Something I've been working on a lot. We're just waiting right now. I gotta get grinding on the short form content and all the content creation again so we can start to grow the stream. But I appreciate, everyone that's tuning in the early days. This is gonna be like the inception of the streaming. I expect it to grow a lot, and I want to see, a lot of growth in terms of me, in terms of the viewership, in terms of everyone watching as traders. I want to really do something big here. Yeah, there's not much right now. It's really just waiting so we could just chill and talk. I don't have anything to do in this current state of price. To me, putting risk on within this is just asking to lose, right? The 5 minutes not offering any range, so I don't care. Yeah, I was wondering why you didn't post any new videos a few days back. Yeah, I haven't been posting. I will, though. I'll start posting. Mainly shorts. I'm going to lean more on short form content, and then the long form will be the stream, right? So more of the long form that you'll get out of me is the live trading, the live streams, and then we'll just have a lot of short form. It's most likely how it's going to go, to be honest with you guys, which is fine. That's going to work well. The most you'll learn is live right here on stream with me. I can make cool dedicated videos, like long form YouTube videos, every so often, and they're cool, but you're going to get the most growth just watching the lives. Because I'm literally walking you guys through the thought process. Shorts are better for our TikTok fried brains. Unfortunately, that's the case, yes. Low attention spans. But if you're watching streams, you have a relatively high attention span. It's long form. The streams are definitely where the most knowledge is going to be because, like I said, I'm walking through the thought process. I'm explaining things in real time. You can't necessarily get that from a short or even really from a YouTube video a lot of times. The actual like polished videos are more put together. You see like the trade, you see the after the trade, whatever, but you don't really see the thought process going into it, the way we flip narrative, the way we adapt. I don't know if I'm going to take anything if we just keep trading like this. We could, like I said, look for something off these lows to revert back into the range. But we already order paired these lows, so I really wouldn't want to see this get reached for. Is this 4-hour internal? This is just trolling. Potentially for longs off London lows, but I don't love anything right now. There's nothing that's jumping out to me like this is high probability A plus. Just range bound price. But what we could see if we come off London is we stay into the 4-hour gap. Sweep London lows on S&P and then we long there. Because we're just stalling in this 1-hour internal. There's just nothing. Look at the 5-minute. But the way we're stalling, the way we're messing around here does not look bullish to me, personally. I'd at minimum want to see us want to reach for these lows. We continue to sell down. This is not looking bullish to me. Friday, I don't see any displacement that could happen unless Trump. Low resistance liquidity on the 5-minute. Yeet. Yeet. Do we have news today? I honestly didn't even check. I'm not gonna lie. I did not check. We have no red folder. It's not looking good for us, boys. It's not looking good. No red folder. See, like, that's discretion for me. The size of a good fair value gap, that's discretion for me. But I would say a good rule of thumb. A good rule of thumb would be if you have to adjust your y-axis over here or right here, whichever. Here, I'll just make it full screen. If you have to come over here and adjust the y-axis to see the fair value gap, it's probably not a high probability fair value gap. Like, that would be my rule of thumb. But that's more of a discretionary thing for me. But that's a good rule of thumb. If you got to come over here and go like that to see your gap, it's not high probability. It's not a gap I would want to trade. I want to see clear gaps in price, but also it's just really understanding market structure. So if we create a gap We create a nice little gap right here. I don't feel... This is discretion. This is what I mean. It's just chart time and it's understanding market structure. Where's my... If we create a gap right here, but we don't actually put in new highs or new structure, that to me, I don't have as much conviction in that as seeing something like this, where we put in new highs and new structure. This is not the same as the latter is to me higher probability than the first one, because now we're putting in new structure, new highs, right? So it's not only looking for displacement, it's not only looking for buyers and sellers to step into these markets with speed, but it's market structure. If your grandmother can't see the gap, then it's low probability. I mean, if that's how you want to see it. If your parents need their readers to see the gap, it's low probability. But not for real. If it's like this, I consider it low probability. I won't even trade it. Where I'm adjusting the y-axis. But it's also, like I said, I want to see market structure change. If we're in a downtrend, and then we get a gap right here, it's cool that we're creating a bullish gap. That's great. And that could be the start of a shift in trend. But if we create a gap like this, and we put in new highs, and we break that trend, that is much more significant to me market structure wise, because now we have overlapping highs with the gap, but we've also just put in new highs and shifted structure. So to me, this is a much higher probability sequence than this. Hopefully that makes sense. Not to say I won't trade a gap before we break structure, but it's just nuance around what's high probability and what's not to me. I'll still trade this off a level if I want, if it feels like a valid trade to me. I don't need to see this high go, but it's just lower probability like this than this. The displacement is taking some time after a sweep. Would you take it? You generally want to see it right after. You want to see it be, more immediate. Again, a lot of the things you guys are asking me, I'm more so leaning on discretion. Like I don't have set in stone rigid rules around if the displacement takes X amount of time, then I'm not trading it. It's more of a feel thing. So if we're taking like 10-15 minutes, that's a good displacement up. But again, we're just consolidating. For me to be interested in long, I need to see us break out this range, put in new structures above these highs, and then maybe you could play a trend model to London high. But right now I have no conviction in price wanting to break out of this range. I'm not touching this until we get gaps out of this range. This low probability environment. Obviously on the 1 minute, that's a good displacement, but there's nothing to do. I'm not touching this. Why is this illustrating a good displacement though, based on what I just told you guys? See it? We're putting in new structure. We're putting in new highs. This is not only a good displacement, but it's breaking the highs. It's putting in new highs. That's what you want to see on your displacements ideally. What up, Maria? But this is still just chop. Don't get it twisted. Look at the 15. Until we get to an area where there's actually some edge in trading it, right? Until we get into a high probability narrative area, I do nothing. Like this is, I know it sucks. It's not ideal for being entertaining on a stream, but this is the reality. I'm not gonna just trade in chop to be entertaining on a stream. You know what I mean? I'm gonna trade exactly how I trade, and if you guys want to learn and see how it is, then stick around. You know what I mean? So I wait until these areas get hit, and if they don't, I just do nothing. It's boring. There's just nothing in here right now. Revenge trade on demo, just if I was if we were trying to trade this, and again, I would never trade 5-minute chop, but if we were trying to force scalp this, like be really fractal and go into the lower time frame, I'd be on the 1 minute and I'll just be scalping the edges of this range. I'll just scalp this low, then I'd scalp the highs back down, and you just take base hits within this range. That's it. It's just mean reversion. Then you scalp longs at this low, then potentially if we run into this high and we wick back down and we get a nice, that's how you scalp ranges. But price is fractal. This is a real part of trading. Waiting. Exactly. It's trading patiently for a reason. It's always been that. You sit here and you wait and you sit on your hands until we get an opportunity that is high probability. And if we stay within this tight range on the 5-minute, then there's nothing to do. Look at gold. I mean, I don't trade gold, but I have traded gold, but I'm not trading gold. Weekly's chop. Daily is choppy as well. Not very clean on the daily. Leaving previous day low. What the? It looks bullish to these highs at minimum. I'd at minimum want to see longs towards those highs up here. Potentially PDH and then the buy side right here. Previous day low sweep, like I mentioned, and then longs into these two buy side highs. I'd be bullish on gold right now still. Like this internal is not bad at all. I don't mind that for a trend model. This is trend to me. See, this would be more a trend protocol, so I'm looking to play continuation models. I'd be looking for something like that. Here's my gold analysis for you. Some freebies. But yeah, that's trend to me. In terms of the 15-minute and the 1 hour, I'd be looking to play trend models. So you guys see the difference, and you see the logic of what I'm talking about? Look at the difference, right? So we have a 15-minute structure on gold, creating higher highs, higher lows, fair value gaps. This is a trend environment where I want to play continuation to the highs until my levels get hit. And then we go back to S&P and NAS. We are not trending on the 15. This is just consolidating. The 5 minutes consolidating. Look at the wicks on the 15. It's just a barcode. The 1 hour is ugly. The 4 hour is consolidating. Okay, so there's a large difference in the environments there. I'd be looking to trade trend longs on gold, but I'm not interested in anything right now. And then on the S&P, the Nasdaq, if we come up here and put in new highs, you could maybe take a continuation model long to London, but it's still not the highest probability to me. I like the way we might put in new highs here and shift structure though. Again, if we create a gap through these highs, whoops, and we come out of this consolidation range, that's a good sign for longs. Something like that. Can you? Yes, I do it for the trend model. The whole context area thing is it's gonna be it depends on how you trade that. I don't know. I don't subscribe to the context area thing on the 5 minute. I'm not like break even every time by 15-minute context, whatever, you know what I mean? So you ideally want to see this gap through these highs and shift structure for longs. The way we were consolidating down here did not feel bullish, but this is a good shift up. So this is why I'm not marrying. Like ideally what would have liked to see is a sell down into these lows. Then we pop up and I can long. But right now we're not getting that. We might shift structure out the range. So I'm not marrying an idea. I'm not marrying a bias. I'm not marrying, you know, anything right now. It's just react. Everything is subject to change. You have to react to new information. But we're still in a 15-minute range. More convincing, higher probability longs, as we mentioned before, would be breakout of this range, put in new structure above the highs, and then you play the internal trend to the London high. So if you have a bearish bias, then you come and see that there's bullish order flow and bullish order shoot. I'm kind of confused by that. You'd have to show me something on the chart and I'll explain it. If you have a bearish bias, then you come and see that there is bull. It depends on the time. It's too difficult of a question to answer. I'm not gonna lie. There's too much context needed. If I'm bullish, no, let's just say I'm like bearish to these lows. There's way too, I don't know how to explain it, man. That's hard. That's too hard for me to explain. If I'm bearish and then we get like a 5-minute bullish signature, I don't just switch bias. It's hard. It's too hard for me to explain. I'm not gonna lie. I don't know how to explain that. So what are we seeing right now? This would be your scalp, right? If no, you're good. You don't have to apologize. That's a hard I'm not like I don't want to confuse you, you know what I mean? So I just don't feel like trying to articulate that answer. So for the scalp play, you could potentially play these range highs, right? I'm not scalping. I'm not a scalper. But we're in range on the 15-minute and the 5, and you could play mean reversion. Potentially if it set up. And if not, then we break out this range and you want to see good structure put in above these highs. You don't want to see this sweep and revert back to range for longs. So for my guys that are looking for London high, you don't want to see what's happening right now, which is sweeping these highs and reverting back to range. But that's the reality. And that's why we play mean reversion. I mean, this is a fractal version of my mean reversion model. This is literally the 15-minute, the 15 and the 5-minute, right? Just a fractal scalp version of the mean reversion model. So I'm not interested in taking any scalps, doing anything like that. But you could, you know, make this fractal if you wanted. But I'm basically doing that exact same thing on the 4-hour when I trade, you know, 5-minute reversal model or a 1-minute reversal model off these highs. Same logic. I'm just either playing mean reversion or I'm playing trend. That's it. The best way I can describe how I trade. 1-hour buy side respected. Can I use a 15-minute context for long? 1-hour buy side respected. This 1-hour high, this previous candle high. So like I said, to me, high probability longs are we put structure in above these highs to confirm we're out of that range, and then you play the internal to London high. To me, that's the highest probability long you can get right now in this session, as of right now. As of where we are at the current moment, your highest probability trend model, because I don't love trend models right now in the environment we're in, but your highest probability trend model would be new structure above the highs to confirm we're breaking range. And then you play that retrace for long to London high. So if we do get something like that, I may be open to taking a little jab at it, but I don't love it. Because the 15-minute and the 5 are just still consolidating. We need to see confirmation out of that range. So ideally we push above this high and we get new structure up. Ideally I want to see this range break. I'm excited for the future, man. I'm really excited. I think the stream is going to grow a lot. We're going to do a lot of good things. I really want to praise the Lord. Again, I'm not judging anyone for their religion. So even if you aren't a Christian like me, I want to put God at the center of everything we do. Whether I'm not going to impose my will on people. I will obviously preach my faith. I believe, you know, I have conviction in my faith and I want to plant that seed in people, but I don't judge anyone. So I want you guys to know if I ever talk about faith, great pure intentions, and I hope I can plant the seed in you, and I want to praise the Lord and put him at the forefront of my stream. As we grow, we can also grow, you know, other people's faith in the Lord, because the Lord is a rock, man. He is the rock. Every day I'm trying to see God and I'm trying to improve as a man. And there's times when I fall off and I feel further away from him. And there's times when I feel like I'm much closer and I'm seeking him the way I need to be. And it's about being consistent. So it's nice to have accountability partners, but it's also nice to just have a stream like this where we can kind of put him at the forefront. So if you guys don't resonate with that, you guys can leave the stream respectfully. You know what I mean? I have pure intentions and I'm going to praise the Lord and preach and put him at the forefront. So if you have an issue with that, I'm not the streamer for you. I just really want to grow in my faith, man. But yeah, we want to see structure above these highs, like I said. Give one example of a high probability setup and one example. So like a low probability trend model. Trend models to me are when we are in a trend market, we're putting in higher highs and higher lows. Generally for me, I'm looking at that off the 15-minute and the 1 hour. That's how I'm determining whether I'm playing trend or reversal. A low probability trend model is one that takes place in a range environment. What do I mean by that? If we were to put in a 5-minute gap right here within this 5-minute range, and you try to play this trend model, it may play, but to me, this is a lower probability trend model because now you're effectively trying to play a trend entry in an environment that is just consolidating. And when we're in range-bound consolidating markets like this, these internal gaps tend to fail. To me, how I view price, how I trade, that is a low probability trend model to me. Conversely, if we put in structure above these highs, we break out of that trend, or we break out of that range environment on the 15 and the 5, and we're now out of a range. This is a higher probability trend model. So there's nuance to what we're doing. This is why I recommend you guys grade your setups. You get a feel for A, B, C setups, A+ setups, because not only does it make you better at spotting nuances, but once you actually have the data to support your A setups make you more money, you can put more risk on. You're now skewing your P&L positively. So if you know you have more edge in an A setup, why would you not put more money on an A setup? It doesn't make any sense. I don't know if you guys play poker, but it's like, if you know you have the best hand, why would you not try to get all the chips in the pot? You don't just bet small with the best hand in poker. Like, if you know statistically you have the best chance of winning, or you have quote unquote the nuts is what it's called, you have the best possible hand, you're getting all the chips in the pot, or at least you're trying to. So you need to maximize your winners. You can do that through bet sizing, right? Through your risk sizing. You also do that through trade management. That's my rant on grading. So you need to understand nuances. The nuances matter. So we're now breaking out of this range. I like this better. But you could potentially play is that trend model the London highs. If we revert back to consolidating down here, then there's just nothing to do. What I wanted to see in an ideal world was to long these lows. But like something like that, and then I get a long in here would have been a nice little play to the upside. Because I'm just expecting this to be a sloppier session. There's a unicorn. You see it as this. I don't see a fair value gap unless you consider like one of these a breaker, but that's sloppy consolidation. How I see this is really just market structure shift on NASDAQ. This is just straight chop. But now we're putting in new highs. That's what you want to see for longs. What do you consider the unicorn here? Because this, that is not good looking. My brain isn't even wired. Like, I'm not wired to see breakers and failure swings anymore. I just don't need to. It's just not, it's not what moves the needle for me. I'm basically trading breakers and failure swings without even thinking about it. This is a good push. Much better. Okay. You guys see the difference contextually, what we're going to get here nuance-wise, right? If we create an internal here, does that make sense why this would be a higher probability long to me? And again, everything I'm saying is based on my data. It's based on everything that I've perceived from price. It's how I trade. I'm not telling you guys you can't, you know what I mean? Like, start trading, collect your data, learn from large sample sizes. Get hundreds and 200, 300s of trades and see what themes you find. For me, I see a clear pattern and I have data over hundreds and hundreds of trades to say playing trend in a range environment is low probability. It has minimal to no edge, like very small amounts of edge. Yeah, any V-shape entry is always going to be very high probability. That BPR, like that BPR sequence, V-shape sequence on the lower time frame is always going to be a nice high probability signature, but it's not enough. Like, I need the full, you know what I mean? It's like one ingredient. I need the full recipe. I need draw on liquidity, narrative, then that nice entry function. It's always a good thing to see though. Like, my A+ setups will always have that. Your A+ entry model for me is like a S&P and NASDAQ are in sync. We trade into our level we want, and then you get that nice V-shape out where we shift structure. Usually there's a BPR inversion like this. That to me is like that's like the ideal. Like, you get something like this where there's an inversion and the gap out, and then S&P and NASDAQ both create that sequence. That's like your highest probability. To me, that's my highest probability entry. But it's not just an entry. An entry alone is nothing. An entry model alone is just pattern trading. Yeah, SMT solid. So I like how we're creating new highs now, and to me, NASDAQ's leading. Yeah, NQ is definitely leading. So if you were to long, I would prefer NASDAQ. I'm not in a rush to put risk on. Just this environment we're trading in is just not the highest probability. But again, we're seeing that 1 hour hold. I don't have conviction to long down here, so for me to want to long, it would be more so now once we retrace, like something like that. But again, we'll see how this feels. I'm more of a discretionary trader, so I'm understanding the environment I'm in and I'm trading narratives that align with that. Definitely NQ longs if you're gonna long. So a nice trend model would be this. That'd be something I'd be willing to put some risk on for. Our take of the day. We had a nice +2R short yesterday. I think we're sitting at +1R in the week. We'll see if we can cap it off with a nice little long, and if not, and we work right back down to the range, I'm just not going to take anything. Nice little long sequence though. I gotta fix my Nightbot to make it post stuff less frequently, like a little less frequently. So we got 15 minutes till this new 15-minute gap forms. There really is no 5-minute displacement to play trend model. So again, I'm still just waiting. And if we go to the highs, we go to the highs. I don't see anything right now. There's no model. There's nothing that has formed for me. I just sit here and I wait until I get an actual, you know, proper model to put risk on for. So for me, again, that would look like staying into the 15 when we form in 13 minutes, then maybe play trend model up to the London highs. Something of that nature. Look at that daily on the S&P. This looks like the last 4 months. Price literally did this for 4 straight months. And then we just rocketed for like 2 weeks. All-time high price action. Now we're probably going to see a lot of this accumulation, then rip up. I've been getting bad eye strain because I look at the charts so much. I'm at the charts so much. I'm trying to wear these blue light glasses. Trying to wear these blue light glasses to stop the eye strain. We're waiting for this 15-minute gap anyway. We got 12 minutes. I'm gonna run to the bathroom real quick, and then we will see how this is looking. But I'm not interested in anything right now. There's no 5-minute displacement to play trend model. I wouldn't be interested in price coming back down here to play a trend model. Like, that's the only 5-minute gap. And I would not want to see this reach all the way back down there and then try to play longs. You want to see this just continue to put in, you know, a push higher, and then potentially we play this, but we'll see. London highs to me is looking like draw right now. But I'll be right back. I'm going to go to the bathroom real quick. All right, what we got going on? Long now, it will hit the high while he's gone. Imagine. I like the trend model better with the structure it's put in. We're no longer trying to play a trend model in that range. So we could potentially see London highs you reach for. Matcha. Bro's at work in the stream. Respect. That's my dog. Put some respect on Zay Gilly's name, man. That's a real one. 15-minute internal. 6 minutes. Broke out of this consolidation range, which is what I needed to see to even consider longs. I like London high as what price you reach for, but again, we are navigating a more range-bound 4-hour. Put some respect on my matcha. I can't do that, brother. I can't do that. I was not joking when I say you might as well just drink green tea, bro. Just drink green tea. Don't call. You might as well just not call it matcha or drink green tea. I won't respect your matcha, brother. NQ leading. I only would want NQ longs. We could potentially see internal then SMT on NQ play longs. But looking at London high is draw. And then from there, we may just sweep highs and work right back down. But we got another hour till 12. I really generally want to be just taking trades within 9:30 to 12. Really like 9:45 to 12. I'll take trades at 9:30, but it's gotta be clean. Gotta be clean. But yeah, something like this could play. Trend up to the highs. I'm not jumping out of my seat like this is an A setup. I'd give it like a C. It's like fringe CB. We'll see how it forms when it has entry. Just contextually where we are, like nuance wise, I don't love it, but I do think that London highs are draw. I'd be willing to put risk on for that. We're putting in lows, new highs, lows on the 1 hour. The 15-minute is breaking out of that chop. I have nothing on my end playing it safe. I might try a long here, and then after that, we'll see what happens. Yep, gold reached into the internal we just marked out, right? You can see the arrows there. Now once you get this nice sequence above, change your state, inversion. Once you get this nice structure above, you can long that. Gold looks way better. I like the gold longs. 4-hour gap. Sweat previous day low like we talked about. Nice structure flip. I would want to see it respect this, yeah. 15-minute internal. You just need confirmation on entry. You just want to see this put in good structure up. Little eval takes day. If you need a gold trade, little eval take. You're still trading evals, right? Hop on a gold long maybe. I want to grab some funded next futures evals. Like the Bolt. Still no confirmation on this. Like you at minimum want to see a, like I said, structure shift up. Cause there's no inversion for me. There's no trade as of right now. This is just coming down. Need good structure shift up on entry. Like that. Nice, we're gonna bag. Love that. Love that, love that, love that. Is this really gonna bag? There's still no 5-minute gaps. Love that. I just started so my dad is a commissioner of like a fantasy baseball league. And so I just joined. So I just started following baseball. I like my team though. I mess with my team. I feel like my team's good. Don't like that. Don't like that close. We may just be sitting here watching this go to London highs. Unfortunately. But definitely looking like London high draw now. Right, so initially in this chop and range, we were looking for a low sweep then go, but now we've since reacted to new information. We've broken out of that range, put in new structure above. Right, so we're looking for London high as draw. So this is how we're fluid with price. We're not marrying an idea. We're not marrying a bias. Everything is subject to change. You just have to react. According to you, which one is best confirmation? So this is where I have a more of a hot take. I don't think any of them matter in terms of, I don't think any of them really move the needle. I think you should use the one that stands out to you. Use the one that gets you in the most consistently. And if you really want, and you're like hung up about it, track them on every single trade and see which one works the best for you. Track every trade you take. Track if it's a change in state entry, if it's a gap entry inversion. See which one works the best for you. I use for value gaps and inversions. They always stick out to me. They've always just resonated with me. For value gaps especially. I really like inversion entries because I'm entering off speed. So that's why I use. Changing state's good too. It's just different. It's just different ways of viewing the same thing, man. You're just waiting for confirmation on entry. That's all it is. It's an SMT with the 815 high. Yeah, right. The 815 high? Hold on. That's not the SMT you're talking about. Oh yeah, well NQ's leading. You see what I mean when NQ's leading, so. Definitely want a long NQ. See what I mean? That SMT you're pointing out, that's how you dictate what's stronger, what's leading. It's market structure, it's displacement. NQ's putting in new highs already in shifted structure, whereas ES hasn't. So if you're longing, every single time, 10 out of 10 times you long NASDAQ here. I don't care if ES is better R, like if it looks like it's a better trade to the London highs. It looks like that because it's weaker, right? I want to play the stronger ticker towards my target regardless of R, because that's what, you know, is going to give me the highest probability of hitting target. I'm just marking this gray line out so I can see it on the 1 minute. So down here is the 15-minute gap. If we reach into this, we could try something like that to London highs. That's worth a jab to me. It's worth a try. What is this music? I wish I could play my music, the music that I listen to. I listen to a bunch of God praising music, but it's so good. I like Christian rap and indie and stuff like that. I wish I could listen to that, but Dilly SMT at the M15, but it's not inside my trading session. What's your session? I think the music was actually a little too low. 9:30 to 11. Interesting. No 5-minute gap. It's this internal or nothing for me. 15-minute internal or nothing. Otherwise, I just don't have a trend model. And if I don't have a trend model, guess what I do? Nothing. It's either I'm playing a reversal model off London lows up here to long, or I'm playing a trend model to London highs. And if neither of those form and we just go to London highs, then we go to London highs and I sit here and I do nothing. I know I keep repeating that, but that is so important to understand and be able to do. Because 90% of people cannot do that. They can't do it. They can't sit here and watch this go. Like if we don't retrace this, I do nothing. There's no 5-minute gaps for me to get involved in right now to play trend. And if we just go to London highs, we go to London highs. I wait for the next opportunity. There's literally always another day to trade. There's always an opportunity. It's not the end of the world. But 90% of people can't do that. Ideally, we come down and we hit the 15-minute gap and we flip off this at long here and we play towards London highs. But what I want is not always what happens. Interesting 15-minute candles here where the S&P's bullish. So I have a bearish NQ candle right now. It's like NQ wants to retrace the gap, but ES is holding it up. Interesting. Yo, what's up with the new top step changes? Something's going on with top step, man. Something is going on with top step. Too much is changing. Probably will focus more on being a broker. Why though? We're not gonna get our retracement. Gold? Is it printing? Ooh, he said gold, gold, gold. I realized that there's a whole world with 100%, whole world, and it's the best opportunity to trade, bro. Why would you trade your own money when you can trade at prop firms? Why would you risk? Think about it this way. Let's say you have $1,000. That's it, $1,000. Why would you risk $1,000? Fund a personal brokerage, like a Trade throw it into a personal brokerage account, fund that, and then really only be able to trade maybe $100 worth of risk, when you can take that $1,000, break it down into a bunch of prop firms. You could have maybe $1,000, depending on how you spend it, can get you a bunch of fundeds, and there's a good chance you pass the evals if you know what you're doing. You're getting so much more out of that 1,000 when you leverage it into prop firms, assuming you know how to play the game, assuming you know how to, you know, follow the rules. You obviously have more friction, I guess, to make the money for sure, but that's the nature of the space. If you're gonna get you know, an opportunity like that, like you pay with prop firms, you're paying 100 150 bucks, whatever it is, and you can potentially pull out thousands of dollars if you go on a run, or if you're a good trader. Like, it's a crazy opportunity. So with that, there's obviously going to be rules there to make you fail. You know, prop firms ultimately make money, or at least the retail prop firm makes money when you fail. That's the reality. You need to understand that as truth. The majority of prop firms, they don't have the exact interest as you. Like, your interests aren't aligned. A brick and mortar prop firm on Wall Street is different. So you guys need to understand that nuance is very important to understand. Right? Understand the environment you're trading. Understand what makes you fail accounts. Know the rules. Understand what makes them money and what makes you money. Understand how to play the game. Because when you're trading on Wall Street, it's entirely different than when you're trading with Top Step or with a prop firm like that in the modern future space. Majority of the Wall Street firms, they make money when their traders make money. They're investing in their traders' growth. So they're basically they have interests aligned with their traders. They're not making money until their traders are profitable. Retail space prop firms, you know, it's an entirely different thing. They make money when traders fail. But the reality is, whether their interests align with us, whether they want us to fail or not, the opportunity is there. The opportunity is great. So you have to capitalize. What happened with GC? Nothing yet. Still not respecting the 15. This looks like it would be cooked. You took the change in state. Nothing going on gold. Still feel like this 15-minute gap can respect. I'm still not out on that 15-minute. I'm not touching gold. I don't trade gold, but still feel like that 15 can respect. We'll see though. Hey yo, what's up? Watching from India. What's up, man? Appreciate you tuning in from India. I'm excited to start growing the stream. It's gonna be cool. London high draw. Nothing to do. A lot of waiting today, guys. But hey, it's what it is. It is what it is. Mm, 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 mm. I want some advice. I'd say I know intermediate ICT and I take trades using CRT, but the biggest L that is happening with me is finding the bias. I only trade Euro. Bias is like my strongest thing. So you're watching the right stream, bro. I would say bias is my strongest skill. So just look at how I view bias. I use internal and external. I break down price from the top down. Just kind of watch how I run through price, and you'll be able to see how I react to bias. Bias, I need to look at your trading to understand how you run through bias, but you got to understand bias is not something that's set in stone. You don't go into a day and say, this is my day. Like, I think a lot of people that are newer to trading go into a session and they're like, this is my daily bias for the day. And then at 9:30, they're bullish. We get this crazy change in structure. The market's shifting bearish. We have obvious new information to adjust to, but they're still like, my bias was bullish, I'm staying bullish. Everything that you do in trading should be subject to change. You need to flow with price. For example, going into today in this range chop, I was potentially looking for these lows to go and then long this. I wanted the long London lows, but what did we see? We broke out of this consolidation range, put in new highs, and I immediately flipped and said, okay, we're reaching for London highs because we didn't want to go and tag sell side lows. I wanted to play sell side lows to long into this London high, but that's not what we got. So our draw is looking like it's going to play here. Unfortunately, I didn't even get a model, so I just do nothing. And this would have played if we tagged it based on how we're looking right now. This would have been a valid trend model. But I'm just not going to do anything because we're basically approaching London highs here. I wanted to see this, and then I long this trend model, the highs. But yeah, just watch how I get biased. I also recommend trading futures. I'll recommend that to everyone. I think that CFDs, you have more working against you. I never, ever, ever want to worry about spreads, bro. I don't want to worry about spreads. Trading is already way too difficult. There's commissions. The markets are complex. Don't add more to the puzzle than you need to. Right? You want to choose the pathway of least resistance. I believe that's futures prop. I really do. I truly believe that. Rule number one, never blame the markets. Facts. Rule number one. What is rule number one? I was gonna try and say something profound. I got ahead of myself. Yeah. I was gonna try to say something really profound, but I just didn't think of what to say. What would rule number one be? I don't know, man. First month on futures, I'm seeing some light for sure. You got less friction. You have less working against you. Again, I wouldn't recommend futures prop unless I genuinely believed it was the best pathway forward. It really is. It really is. It truly is. It's the best opportunity, but you need to understand the environment you're trading. You need to understand how to milk prop and play the game. You need to understand the rules. So it's not, you don't just go into it blind. But I will confirm for sure, you're better off trying to milk prop and play the prop game than you are throwing all your money into a live account. There's tons of benefits. Rule number one, never blame the markets. Oh, I already read that. will be stop gambling. Rule number 1, don't break your rules. Brain fart. Yeah. Nah, I was gonna say something profound, and then I was like, I don't know what I would call rule number 1, and then I was gonna say something funny. Rule number 1, never play stuff. I was gonna say something else, but I didn't want to be controversial. In all seriousness though, I would say rule number 1 for me is recognition. Rule number 1 is recognize what the markets are doing. Understand that the markets are going to be the markets. It's never the market's fault. The markets don't care about my feelings. The markets don't care about my P&L. They don't care about my model even. It's my job as a trader to recognize what the markets are doing and adapt. To me, that's rule number 1. Everything like that precedes everything else. Recognition precedes everything else I do. We're getting a little bit of a retracement. That's very interesting. That's a deep retrace. Rule number 1. Rule number 2, don't eat trading view. I don't know what that means. Don't know what you mean by that. I'm running low on matcha. Don't break your rules. That's a good rule. Rule number 1, don't break your rules. Rule number 1, follow rule number 1. But nah, seriously, I think, nah, if I had to, that's tough. There's so many important things. If I had to pick my number 1 rule before everything else, it's either recognition of price or it's risk management. Because those two things precede everything else. Before I'm in the trade, I'm wondering what I'm going to lose on the trade. I'm setting in stone what my risk is. I'm not, you never go into a trade and say, how much can I make? You say, how much can I lose? How much am I willing to lose on this? Right? You look for opportunities with edge. You look for high probability areas to trade from. And then you say, how much am I willing to put risk on this? You know, people don't like to frame it this way, but you are saying, like, what is my bet size? How much am I willing to bet on this? Because bet sizing is really important to understand. We're playing a probability game. When you're playing a probabilistic, game, you need to understand bet sizing, risk management. Just like poker, there's so many similarities with poker and trading. So if you guys are good poker players, there's a good chance you will be good traders. I truly believe that. So many similarities. It's so similar. We better not hear no excuses next week for streams. I got you. They're done with my roof, so there's no banging on my roof. There's no drilling. I didn't want to start streaming and then you just hear like, that's not what I didn't want you guys to come into the stream with that first impression. So that's why I didn't stream Thursday, and then earlier in the week I was not streaming because of the same thing. Like, that's not the impression I want to give you guys. I want the stream to feel quality. I want the value and the education to be there, and I want to have a fun time. But yeah, I got you. Spider Solitaire? I don't know what that is. I've heard of Solitaire, obviously, but I don't know what Spider Solitaire is. But yeah, we will be streaming every day next week. So I'm excited to start growing the stream. I'm going to have to get going with the short form content. If you guys know video editors, if you know anyone that wants to work with me, I am going to be bringing on a short form video editor. So basically what I want to be doing is clipping up my streams, clipping my trades, building, high performing short form content, and then uploading that daily. And we can kind of use that to funnel into the stream and grow the stream. So it would be really cool to start to grow the stream. Hi bro, first time in this live. What's up? Nice to meet you. Appreciate you tuning in. Expect streams every day at 9:30. Everyone watching right now. 9:30 a.m. every single day. Not Saturday, not Sunday. Every day of the week, every weekday. Obviously, the trading session days. We're not trading Saturday, Sunday. I won't be live. But I will be in the Discord on the weekends. So join the Discord. We have Nightbot popping in the Discord link every like 10-15 minutes. Probably pre-installed on your desktop if you use Windows. I've definitely heard of Solitaire, but I haven't played Spider Solitaire. I don't know what that is. Are you going to trade Forex? I used to trade Forex. I like futures way more. I like futures way more. I like the way you trade, waiting patiently, trading patiently. But I appreciate it. Yeah, that's the name of the game. If you can't wait for your levels to be hit, and if you can't wait for the trades to actually form properly, then you're doling your edge. Forex futures, there's, well, so they're technically currency futures, right? So it's not foreign exchange. I'm not trying to correct you or like be a know-it-all, but technically it would be currency futures. Forex is foreign exchange market, right? So you have the currency pairs, euro, US dollar, etc. I'm assuming you know what Forex is. These are currency futures, so it's actually just the currency itself and the futures derivative. So euro futures, pound futures. So it's not really foreign exchange futures. I get what you mean though. I don't trade them, but I have in the past. I just trade the S&P and the NASDAQ. But I get what you meant by the question. I just wanted to clarify that. Because I do see people consider these... It is, you know what I mean? Like, it is Forex futures, I get what you're saying, but it's technically it's the currency. It's the individual currency. It's the euro, but it doesn't really matter. But yeah, to answer your question, I used to trade euro and pound. Like, if I were to trade them, yeah, I know you get it. My bad. I wasn't trying to be a... My intention was not to be a know-it-all or like... Actually, like that was not what I was trying to do. But euro and pound, this is how I would look at it. So when I was trading euro and pound, break it down the same way I do with S&P and the NASDAQ. I'm using them for S&P, right? So euro and pound futures, definitely tradable. When you get down to the lower time frame though, it's not. Yeah, you know what I mean? Look at this. Not ideal. So you really can't trade the 1 minute. I mean, you can. I'm not gonna sit here and tell you can't do anything, but not very clean. 5 minute, 15, not bad. And I have traded euro and pound futures in the past, but I'd look at euro and pound side by side like that. There's our draw hit, guys. Unfortunately, I literally just didn't get a model. I have no model that has formed today. We're trading off London highs now. Draw has been hit. Good push up. Right, nice to see. This is what I mean. The bias is probably the most consistent thing about my trading, because even if I'm incorrect about where I believe price is going, I'm able to shift like this and get back on side. Wow, nice push through the highs. I mean, we're taking this if it tags. We just didn't get our retrace, so I just have no model. Just the framework didn't form, but we would have longed into this high. Essentially, what I wanted to see was, I mean, if you guys go back to the stream, you can see exactly what I was looking for, but wanted to see a tag into that 15, then we flip back up in that long trend model. So thank you, highs. Yeah, euro is not that clear, but I believe it shows the right data rather than XCM. Yeah, well, it's CME group, isn't it? So you know you're getting, yeah, it's CME group. It's the Chicago Mercantile Exchange. So you know what you're getting with that. CME group is the best. I don't know if I'm going to take anything, guys. I don't know if I'm going to take anything. Took this off the IFEG from London. Let's see. IFEG from London. Somewhere in here. But yeah, our draws were hit. Right bias, looking for the right levels. Unfortunately, I just didn't get a model. That's all it is. And that's the game. Kind of had a feeling when we got this close. If you guys go watch back the VOD on this close, I'm like, yeah, we're getting a bag. We're probably not retracing this. What I wanted to see was that. And then we long that trend model towards London highs, and then I'm taking it off at London high. Unfortunately, right bias, right draw, I just didn't get an entry. Occasionally that's going to happen. I generally will get a lot of entries, but today we just didn't get one. Because I also use 5-minute gaps, right? I use 5-minute gaps to play trends. So had we gotten a nice 5-minute gap, I even would have played the 5-minute gap. Assuming the 15 minutes a bag, but we didn't even get a 5-minute gap. So there's just nothing. Gold. Oh, nada. Oh, anda. I don't use CFD, but that's a good structure shift now. Holy candle. I mean, this is just choppy, but I do ideally want to see that 15-minute hold. And then you look for TP at these highs or these highs. They're looking at buy side draws. It sounds like a movie, like soundtrack right now. I feel like I'm going to war. A Navy SEAL. Yo. I coded my own indicator. So I don't use indicators to do the gaps. I don't use indicators to mark out inversions, gaps. But I do have session liquidity coded right here. So I coded this fine script. Well, I didn't. Let me be clear. I don't want to be misleading. I didn't directly code. I don't know how to code. I used AI to code it. I did code my own indicator, but I didn't. I'm not a coder. I don't know how to code. I used Claude. I've been using Claude for everything. Crazy what that can do. I don't think I'm gonna take anything, guys. I'm really not interested in trying to short this. The one opportunity I liked was that 15-minute internal play continuation trend. We're not getting it. Obviously, we did not get it. So now there's just nothing for me to do. Don't think I'm gonna take anything today. But nice to see our biases play. Like I said, I think bias is probably my most consistent skill set. Like I humbly, let me preface by saying I mean this humbly. I'm not trying to sound egotistical, but I really do. I think I call biases at an extremely high level, really high level. And so you guys will be able to get those biases every day on stream. Not only that, we will be dropping knowledge, having fun, doing giveaways, all types of stuff on stream. So I'm excited. Every single day, 9:30 a.m. But yeah, the biases are at an extremely high level, humbly. Unfortunately, we just didn't get a trend model here. It didn't set up. Not a coder, but an encoder. Very nice. Yeah, solid. Just session liquidity, looking at London, Asia. I'm probably going to code it to do more, maybe auto SMT, stuff like that. But right now, it's just marking out session liquidity, and then from the top down, I kind of just mark things out myself. I'm really just looking at internal and external, meaning the exterior of ranges and the inside of ranges, using gaps and swing points. How I trade is very simple. Markets are very complex. What makes trading so hard is adaptability. Like I said, recognition, being able to adapt. But the way that I view charts, the way that I view market structure, the way that I view draws, everything, pretty simple. It's just a lot of chart time. Like I think it's a quote by Da Vinci. It says, simplicity is the ultimate form of sophistication. I feel like I have a very sophisticated understanding of price now, but I've simplified it down to really just gaps and liquidity. Because because there's more logic to it. It's just fundamentally how the markets book, right? Order pairing. Markets are always either in a state of expansion like this or retracement, or we're just consolidating. So I have a model now that focuses on liquidity and internals, and I'm playing both stages of price. Play trend or I'll play range. Yeah, I use the pro version of Claude. I use the desktop version and I pay for Claude Pro. It sucks that they put like the usage limits on it, but it's so good. Claude is the best, in my opinion, for everything but image generation. If you want image generation, graphics, things like that, I wouldn't go to Claude as of right now. I assume they'll probably take the cake later though. But we're in the golden age of AI right now. What's that juice? It's matcha. I just finished it. Basically all out. Just matcha. You just entered gold. We can look at it. Nice push to our London highs. S&P now putting in new all-time highs. NQ putting in new all-time highs. Interesting spot. Interesting spot. We'll see if we just revert back down into range or if we really want to put in some new highs up here. Interesting to see here. We're literally at all-time high. You just entered gold. Stop below these lows. You could look to target these highs for 1.9 is not bad at all. Right to that high. If you want to be more conservative, I like that target. And then if you want a little more, or you could take some off at this high and then you want to just enter gold, guide me. Okay. Yeah. TP1. Why is my TP this high? What high is that? That is the, is that not the 4-hour high? Where did I just get that high from? Hold on, wait. Right here. TP this high, the 4-hour high. Break even by this high. And then TP2 previous day high. So you got TP1, TP2. If you take partials. If you don't take partials, you want to be more conservative, take it off at the highs. You could take, I don't know what your entry is. What's your fill? What's your fill data or data? What's your entry fill? 100% Kit. I agree. Kit, this is right when it dries up. Gold dries up after 12. Honestly, after 11. That's the truth. 4724. Dang, that's a good fill. 472. Wait. That can't be right. 4724. That can't be right, bro. On GC futures, can't be right. 4742 maybe. 4742. 4724 is down here. I'm gonna assume you meant, yeah, 4742. Okay. So you could get a one. I don't know if you take partials. You could get a 1.7 to these highs. I like that high. I'd definitely be break even by these highs. And then to previous day high, if you held a couple runners, is 2.6. That's how I would structure it. But again, like Kit said, gold dries out. Honestly, after like 11. So we'll see if it plays. I do like higher. I want to see this 15 respect. You definitely want to be risk-free by these highs, meaning you want to have risk off the trade once we hit those highs. That's how I would approach it. But again, I'm not touching this. I don't trade gold, and I don't like the time of day. But this could play. You want to be trading gold within that like 8 to 11 window. 8 to 12 if you want to be a little more risky. But our draws have been hit. This is a rare flat day for me. Very rare. I'm generally taking 1 or 2 takes every single day. Rare flat day right now. I might be flat on the day. So Friday though, we've been consolidating all week. We had a nice draw. We had a nice potential model and it just didn't retrace. Couldn't even get a 5-minute retrace. There was not a single 5-minute gap for me to long. I just literally didn't get a continuation model today. Sometimes that's how it goes, man. My buddy just asked me to golf on Saturday. Yes, sir. You already... Come on, man. Insta yes. I'm trying to get good at golf. I haven't even broke 90 yet, chat. Haven't broke 90 yet, but it's coming. If I can get good at trading, if I can be a really solid trader, I can get good at golf. That's the thing about trading. You get good at trading, you can do anything. I mean that. No ego, just the truth. It's so hard. This is the hardest thing in the world to do. If you can get good at trading, you can do anything you want. Anything you put your mind to, I believe it. If you figured out trading, you can do everything. I'm out. Thanks for everything. Have a blessed day, or have a blessed weekend. Appreciate it, Kit. Thanks for tagging, or it's for coming along and tapping in. I appreciate you. Have a good weekend as well, man. God bless. Keep getting wicked out of trades trying to enter on breakers. I'm not a big breaker guy. Give your stop some more room, man. Sap, I'm assuming you're taking breaker trades and you're just covering the breaker. Give it more room. You don't have to use breakers either. I went on a rant earlier about entries. I don't think that they move the needle. I always like to have my stops at the swing lows or the bodies. So generally my stop, if I were to enter long, obviously just hindsight, but if I were to enter a long, every time I place my stop, it's at a swing low of invalidation or it's at the bodies. One or the other. Is my boy getting cooked on gold or is he good? Chopping. Choppy, choppy, choppy. Choppy gold. I'll just let it play. If you're in, let it play. You either get stopped. Your risk should be managed, bro. If you're managing risk properly, you either hit stop, or you come up, you hit break even, and you beat that. Take some off at TP1, or take it all off. Whatever you prefer. What was the entry? 4742. So you got a 1.75 if you hit those highs. You could take a base hit there, take it all off, or take like 60 or 50% off, then hold for previous day high. But there would be no reason to be break even yet, in my opinion. And hopefully it plays for you. My solution is lower contract. I mean, do you trade futures? Trading the 1 hour, if you're trading prop, is tough. Tough, but I'm not gonna sit here and be like, you can make any time frame work. It sounds like Rocket League music. I used to play that game as a kid. Just take the inversion, or take the change in state, or take the, you know what I mean? Just give it more room. I'm not a big breaker guy. I understand breaker logic. It's baked into how I trade because it's fair value. Like breakers and failure swings are just baked into how I trade. I don't think about them. My brain is never clocking something as a breaker, a failure swing, or whatever. Breaker mitigation block. Like my brain is not clocking that. I don't need to think about that. I just understand market structure, and I look for fair value gaps and liquidity. So understanding fair value, where we should head higher from. That's what, to me, is what is important. Price offers sell side, then it offers buy side. If we're going to go higher, we should do so from there. Right, so hence why I was looking for a long off this internal. Unfortunately, we just didn't get our retrace and we just expanded. But I don't need to think about breaker, mitigation block, propulsion block, all the stuff. It's just noise. Like I said, I believe simplicity is the ultimate sophistication. I have a sophisticated way, like a sophisticated understanding of price, but it's extremely simple because I stripped it down to what it needs to be. Just a lot of chart time, a lot of data, a lot of trading. But I'm learning every single day. Still trying to get better every single day. This mic is so clutch. There's a mic right here. You guys can't even see it. Look. Think. But no one will know. Shh. But it's perfect. Because I don't have to be leaning over like this into the other mic. You just literally look at the screen and talk. Clutch. Simplicity is better. What about unicorns? Someone was talking about a unicorn earlier. Chris, you take anything? I'm flat. Rare flat day. I wanted longs off this internal and I just didn't get anything. Simplicity, but there needs to be logic, fundamental understanding around price for sure. Did it, man. Pretty sure I passed the apex. Let's go. What'd you take, Chris? You longed, I'm assuming, off of order block? Longs off of order block to London? Question mark? Thank you, long. All right, you trade the 3 minute, right? Let me see if I can find it. Where did Chris long? Let's play the where did Chris long game. It's one of these OBs. Wait. I'm assuming, knowing you didn't want to touch this like me. So you wait until this leg out. You play one of these OBs. Gotta be one of those. Whoa, I'm drawing all. It looks like a toddler drew on my chart. Bro, you nailed it. Let's go. It's one of these OBs. Which one? Which OB? Which OB? I don't know. I'm gonna guess. Oh, I guessed wrong. This or this? This little one? A continuation OB. I was looking for the 15-minute second one. Oh, interesting. See, right here, I'm looking for this. I wanted that. I just didn't get it. We would have been in the same trade. Yeah, right here. Okay, you long this. Nice little 2R. Nice little 2R. Literally was... all I wanted was this. And I longed that. Trend model to the highs. We would have been in the same trade. Yeah, that's a good long after we pushed out of it. 15-minute Bissy long was what I was looking for. We didn't see. I would have wanted I would have played the similar logic if we got a 5-minute gap up and then we push up. I would have thought if there's like a 5-minute gap here, I'll just play trend off this. But we just didn't create a 5-minute gap, so I just have no model. I literally just had no framework. But that's it gonna happen. Because I'm using gaps, I'm not using OBs. A rare flat day right now. Definitely would have taken the trend long. Right here. Yeah, TA just wasn't, it just didn't give me a framework. To me, I wasn't trying to long in here. A little bit of just a lack of conviction of this internal or range bound. And then we're just consolidating from 9 till 10:15. We were just chopping. I needed to see this range break to long. Did a good job sitting out of that. And then it just didn't give me the trend model. That's it. I feel like I did what I had to do today. Just you know what I mean? Just part of the game. Bad PA. Dang, man. Chop. You're getting chopped up. Yeah, it looks like you're gonna get chopped up. We'll see if this gap holds or not. It looks choppy for you. ICT teaches the last up close candle. The last up close candle for what? I need some more context. ICT teaches the last up close candle. What was I talking about? I forget. I don't think I'll be taking anything. To me, this is lower probability. Internal tag now. I wanted longs to London highs, to the range highs. We've already put in new all-time highs. We might just literally sweep this and go back down in a range again. Like, I would not be surprised if this gap fails. So I'm probably just going to be flat today and wait for Monday. What's the Discord saying? I've not been in the Discord at all. Let's see what the Discord did. I might mess up the stream here when I switch. Long down, that's chop long. This is what I mean. I don't know if you're watching right now, Zero, but my only knock on this is a straight chop long. Was choppy, to be fair. See, you already know. Wasn't the best inversion. I see why. It was too small, choppy. Exactly. This is just nuance. I wouldn't want to enter in this. To me, I'm like, I need a break out of that to long continuation. Got smoked as well. Should have been more careful. Yeah, they're just long in the chop. We really just got stop hunted. Yeah, they got chopped up. To be fair, it was very choppy, so it's best to wait for the range to... There you go. He knows. Was waiting for a range break. Didn't get a retrace. This is the right way to approach it, in my opinion, at least for how I trade. My boy's golfing. If you guys are in the Discord, hop in the Discord, man. We got a nice little family in here now. I'm really excited for what we're building. Just feels a lot more personal and family vibe in the Discord now. I like it a lot. Let's go. Exactly. It's Friday PM. I'm not interested. Back to charts. Let's see if it messes up now. Oh, it worked. Thick. Scalp short. I'm just not interested in anything now. It's like we were just saying in the Discord. It's PM. I'm not trying to short these highs. We just put in new all-time highs. It's like low probability from here on out. The longs to me, the play today would have been longs to London highs. That's the only thing I really would have put risk on for as of right now, unless we swept the London lows before. But just nothing. So I'm flat today. Unless something crazy changes and we get some crazy volatility through PM, I'm really not interested. Just feels lower probability to see continuation. We might create this 1 hour gap, but we're just playing continuation at all-time highs. ICTC is the last up close handle for unicorn. Oh yeah. Yeah, I don't use unicorn entries right now. I'm a believer that entries don't move the needle. Monday we're back. Monday we will take a trade. Today is just rare no trade day. Probably only happens once or twice a month for me. Unless I'm just not, like, I'm just busy that day. This beat's kind of fire. Like bubbly. But yeah, man. You guys know the drill now. You're seeing consistent cam. Consistent cam, 9:30 a.m. every single day stream. Biases, trades, giveaways, all that on stream. We're going to grow a real family here. We're going to help everyone grow. I'm going to grow, hold myself accountable in the highest form. It's going to be a fun time. We're going to put God first too, most importantly. Go read Proverbs 3:6 if you haven't. Top right. I'm going to set up a different overlay that kind of rotates with different Bible verses. It's going to be sick. With like my favorite ones. Proverbs is straight wisdom, bro. You need some wisdom, go read Proverbs. Anytime I feel like I'm not moving, correctly, I'm not moving wisely, Proverbs. I could probably use some Proverbs right now. You know what I mean? Yeah, I'm probably not touching anything, guys. I might call it here. We got stream 9:30 a.m. on Monday. We're going to be very consistent with it. Stay tuned on social media, Instagram, TikTok, YouTube. We're going to be doing short form content. Share the stream. If you guys want to share it with friends, that would be amazing. Hop in the Discord. One more plug for the Discord. If you're not in the Discord right now, I don't know what you're doing. Like, it's just free resources, free access to ask me questions. It's a no-brainer. Hop in the Discord. We have a family in there. Every single person in there is getting better every single day. So you're just kind of skimping yourself on value if you're not in the Discord for free. So hop in the Discord, stay active in there, and we'll continue to grow every single day. But I think I'm going to call it here. A flat day for me. Closing the week 1R, plus 1R, and a really choppy week. I'll take it. Fine with that. Protect the capital in these bad weeks. Pick your, adapt. Pick your spots. That's what it's about. So I'll take the plus 1R. We'll move on to next week. But yeah, I hope you guys have a good rest of your day. God bless. Make sure you read the Bible if you haven't. Read some Proverbs. Get some wisdom. And yeah, have a blessed weekend, everyone. I'll see you guys on Monday.